In today's video, we're going to be talking about how to take your stop loss. Not only are we talking about how to push the button and get out, but I'm also going to be sharing with you an exercise on how to get proficient at this and actually get out of the stock when you said you were going to get out. You know, we all, as upcoming traders and traders that we're learning, we all had this problem where we knew where we were supposed to get out, we knew where our entry was, and when the price came to it, we didn't hit the button. We sit there and we hope it's going to come back. It ends up going further down, right? We start getting that retest comes up and we're thinking, oh, look, I lucked out. If I would have sold, I would have taken a loss instead of got out with profit, which I'm going to get here in a minute. Well, you never end up getting that profit and it could really destroy your account. Taking a loss is probably the number one most important skill that you're going to need to be able to do this job. And today I'm going to teach you how. Let's go ahead and dive on down to the charts. All right, so this chart here is going to be our example from today. This happened today. And this is going to be your classic, you know, gap up stock. We got a nice little triangle consolidation going through. And you, one, shouldn't be trading in the pre-market, but this is just an example I'm coming across to show you. Two, as you see this candle here, this is a classic mistake that will occur when new traders, when you get really, really close to that previous high and you say, I'm going to buy the break of the previous high. Well, first of all, when you buy a high, that is buying resistance. Okay. You don't want to buy resistance. That goes against the complete fundamental idea of trading. You want to buy support and sell resistance, okay? So at one point, this candle, before it looked like this, was a solid green bar candle all the way up to this yellow line. And what we're going to do is we are going to choose this previous low here as our stop, right? You could choose down here just under VWAP on the main low, but we're going to go off this one, because we're getting the triangle pattern and there should be some kind of compression and then fling, right? So here we go. We're waking up. We're doing our research. We see this stock here is on the scanners. We see it's got movement to it. It's got a ton of volume to it. We're liking the situation and we think we're going to get in early, right? We're going to get in early, kind of off our trade plan a little bit. And let's go ahead and see what happens here. All right, it's looking like it's getting a little bit of buying here, right? Makes me feel a little good. Oh shit, right? We're coming down. But we got a bottom wick. We got a bottom wick, so we're good. We're holding on, right? We just broke below that wick. That's okay. We're still in the triangle. We didn't hit stop yet, right? We didn't hit stop yet. Coming up, I see a little bit of interest as the candles are moving here, right? We got a tiny gap between the 5-minute candles there. I'm not sure if I like how that looks. It's coming down, right? We're getting buying off of there for the people that are buying support like they're supposed to. Let's see what happens. Let's see what happens. All right, this is looking good, right? Oh, I'm feeling better now. I know because I bought up here, I am red right now, so I have this extreme hope inside that it's going to come back to there and just rip, and I'm going to be right. Keyword, I'm going to be right. Okay, let's see what continues to happen here. Well, it looks like we got a little bit of a wick on that previous buy candle. We're getting one more attempt here. Boom. Right now, I want you to go to the comment section and tell me what you should have done right now. What should have happened at this moment? And hopefully you wrote down in the comment section. What should have happened is one of two things. One, the stop order that you put in should have fired. Yes, I know this is the pre-market. I know that stops don't fire in the pre-market. This is just an example. In regular trading session, it would have fired off if you had a live stop order sitting there. Two, you should have smashed the bid. You should have hit your bid key, your panic key, your sell all key as soon as you saw this candle break. All right. Not only that, but let's go ahead and take a look at the volume here. Look at this volume compared to the rest. Right? Giant volume. It just rammed through that. So what happened? Well, all the people that were in this trade, that were expecting it to go higher, that did buy it, all of their stops were underneath these lows, just like you. Okay, so as the price comes down, it's going to fire hard through there because there's a bunch of sell orders. Bam, and that's why we get such an aggressive drop. Now, what tends to happen with new traders is that they didn't hit the button. Instead of just smashing the bid and getting out of the trade, they look at their P&L. This is a classic rookie mistake. All right, you don't stare at your P&L. Your P&L is not going to give you a buy or sell indicator. It's not going to tell you whether you need to buy or sell ever. It never will. Do not look at your P&L for a hint at what to do. Okay, if anything, pro tip here: hide your open P&L. Like move the window behind another window so that maybe your level 2 is covering it. That's how mine is right now, and it's stayed like that for years. So, 1, your stop order should have hit in the regular market. 2, you should have smashed the bid. What you don't do, and what most new traders do, is they hold on to it, and they have this idea in their head that stocks always come back. They'll come back. Don't worry, it'll come back, right? Well, let's see what actually ends up happening. This is a 5-minute chart, by the way, so these candles are 5-minute increments. So remember, we're long, and we didn't take our stop. Now we're just hoping, right? At this point, we're going to be looking at weird stuff. We're going to be like, all right, well, this high right here, maybe that's going to be support, right? Maybe it'll come down here, right? Oh, and then we got the 200. So maybe it'll bounce off the 200 and come back, right? Boom. We're just crashing. Now we're in panic mode. We're like, holy shit, what the hell are we going to do? I don't even know. Do I take the loss? Oh my God, can I even tell my wife this happened? Like, do I just shut the fucking thing out and hope it comes back overnight? All of that could have been avoided if you just took your damn loss right where you were supposed to take your loss. Now, why can't we do that? Why is it that the human condition is fighting us on getting out with the loss? Well, 1, we don't want to take it. We don't want to admit we were wrong. We don't want all of our preparation and what we believe to be our strategy to be incorrect. We don't want to accept probabilities. We don't want, we don't want to be a failure. We don't want to fail, right? So what ends up happening is stuff like this. Now look at this crazy stuff going on. We got some crazy candles happening here. And let me just highlight here, right? We crashed down. Now, where we were when we said that we wouldn't take our loss, right? We were in this area right here, right? We can't take this loss. We're going to hold on. Maybe it'll come back. Maybe it'll come back. And then you see that it just gets ripped down, right? Ripped down. Now, watch this interesting situation. And this isn't by chance, by the way. This is how the market moves. What ends up happening is every time that you think it's going to go further, it gives you the opportunity to do something which is like a cardinal sin, and that's called averaging down, right? So say you bought your shares up here at 23.50, which is right here, okay? And now the stock is all the way down here. Well, in your mind, trying to salvage the situation, you're thinking, if I buy the shares at 21.30, my average is going to be brought down about halfway. So all I got to do is wait for the stock to get to this point here, and I can get out of the trade break even, right? I won't lose any money. That's good. I could walk away, without taking a beating. Well, let's see what actually ends up happening. And this is very common, by the way. This is how price structure looks and moves and is. Now, at this point, we're getting excited, right? We're getting excited. Look at this giant volume we just had come in, right? It popped up just a little bit over these previous highs, and look at this huge volume. Well, what I'm going to guess is there's somebody in here trying to go really heavy short, and he took his quick little loss there on that pop, and he's going to go ahead and get back in, right? And the reason you're going to get back in is because it didn't continue. It was just a little fake out for a second. And this guy that can throw this many shares around, he's going to move this market. I kid you not. Okay, so now we're a little freaked out. Now we're back to where we looked at our P&L and it was really bad. We were not willing to take it. We were kind of getting, a little psychologically screwed up here. And at this point, I see this level. I'm just going to mark it out because I see it. Okay, I see this level. We're starting to come into it. And this here has got to be, your last ditch effort. If maybe you didn't notice this, because once the stress and everything kicks on, you're not going to be seeing straight. You're going to be really panic mode, very much deer in the headlights, scared in the corner. I don't know. You're probably standing up, biting your nails, right? And then let's see how this goes. So the open happened. We came up. We didn't get past this high that happened right there. We averaged down, hoping that we can get out break even here. Well, now we're actually losing 50% more than we were to begin with. So now we're seeing a red number on the P&L that is just ridiculous, right? We cannot accept that. That's gonna ruin our chances of, oh my God, what is happening, right? We're crashing into the 200 now. Holy crap, right? Let's do a little math here. How far down are we? Oh my God, right? We're 30% down, 30%. Now, let me explain to you what's happening right now. In trading, there's something called margin. And margin is extremely dangerous if you can't execute on your stops. The reason why it's so dangerous is because not only when you leverage up, use your margin, do you gain the benefit of having more shares than you should have been able to buy, but when it goes up, your emotions are going to get triggered by the amount of money that you're seeing on the screen, first of all. And second of all, when it goes down, it's going to hit you twice as hard. I read something once in a psychology book that said negative experiences hit twice as hard as a positive one. So winning $100 feels half as good as losing $100, right? So losing $100 feels twice as bad as winning $100. So at this point here, you are so in your feelings, you are just devastated, all right? Now, remember, all of this could have been avoided if you just took your stop right here when you were supposed to, right? That's all you had to do. That's it. Just push the button. But your brain just didn't let you. It didn't allow you to click it. Now, back to my margin comment here. Some brokers, especially this certain broker that is an offshore broker that allows you to day trade with less than $25,000, they're going to give you 6 to 1 margin. And let me just do the math here. If you got into this trade and you didn't manage your risk, you didn't know how many shares you were supposed to take to only lose X amount, you didn't hit the button to get out of the stock as it broke through your stop. Instead, you went all in, you tried to use your whole account, you tried to average down, you tried to hold and hope, which is not a strategy. If you were all in on 6 to 1 margin, you are only able to lose 16.6% of the stock's value before your account goes boom. You will blow up your account. That's because you're using 6 times more money than you actually put in. So 100%, right? To lose 100%, but we are doing 6 margins, so we only need to lose 1/6 of that. That's 16.6%. How far down are we here? We are 31% down. 31. Now, it's just dropping, right? So people's accounts are getting blown out right now. People are losing it. As this is coming through, they're like, holy crap. I just saw this, my gain on this drop by 33%. Oh my God, it's continuing to go. This is a very good example of why you do not hold and hope. This should be a very good example of why you need to hit the button when your stop is hit. There's no reason you should have stayed in this. Even if you thought, hey, maybe over here I could have got in, maybe it was going to bounce off this trend line right here. Even if you did that, well, that sets up a new trade, right? Your stop would be underneath this line. Your buy would have been up here. You would have measured this distance, and you would have figured out that you have a $1 stop, so only risk as many shares as your risk tolerance allows. This stock never came back. All right, so anyone that was messing around with this, Meagle, let's see what happened by the end of the day. Oh, man. It went all the way minus 44% from the entry. It didn't come back. It doesn't show any signs of life. This is a continued fade, far from the VWAP. The pressure to sell is very high on this one. Even this rally right here. Look at this rally. It had the volume. It did. It tried to come up. It just couldn't do it. It couldn't even get past the prior high right here. Right? It just did a retest and just kept on fading. So, what I'm getting at is 1, take your stops, obviously. 2, be careful with margin. If you're using margin, you need to be very, very diligent with your stops. Now, how do you change this behavior? How do you transform yourself, transform your trading to be able to actually exit the trade when you say? Well, let me ask you something. After this trade for this trader, what do you think he's going to say about his success today? Was he successful? 1, he didn't make money, but that doesn't mean you're not successful in your goal that day. 2, he probably blew his account out. It's gone. I'm sure he lost tons more money than he expected. And 3, what's he going to tell his wife or a significant other? Is he even going to tell her? Is he just going to harbor this in and this is going to, boil up in his head and just really get him down? He's going to be really hard on himself and, talking really negative inside, and none of those things are good. So what if I told you you can lose money and still have a successful day? Well, let me explain how. When you're working on this, when you have this issue as a new trader, which most people have this, okay? This isn't something that people can just do. There's a reason that 90% of these people that attempt to do this fail, all right? And this is one of them. 1, you have to accept being wrong. It's okay to be wrong. It is not okay to stay wrong, all right? You could be wrong as many times as you want today. You just cannot stay wrong. If you stay wrong, can stay irrational longer than you can stay solvent. That's a quote from some famous trader. I'm not sure exactly who said it. I wish I could quote him here, but that's what they said. That's stuck around for a long time. It's still talked about today. There's a reason, right? Because it could be irrational. This could have been on good news. This could have been like how is this possible? They just reported earnings and it was a beat. It was a beat earnings. What happened? But that's not how the market works. The market kind of has its own mind, its own agenda. Most of the time, that agenda is to take you out. So you need to be very vigilant. You got to be on your game every time. Back to how to lose money yet still have a successful day. I challenge you, the trader that has this problem and has lost money and or blown his account, even if you have not blown an account, but if you've ever lost money and it was more than you expected, if you were surprised by how much you were red after the trade, then I've got an exercise for you. Exercise. Right off the bat, 1, you need to come up with a dollar amount that isn't going to emotionally affect you. Now, this number is going to be lower than you expect. Right now, the first number that popped in your head, that's not the one. All right? It's lower than that. I promise. You need to take that number and you're going to divide it up into multiple trades. It could be 10, it could be 5, it could be 3, whatever. And what you're going to do is, as you get into this trade and you get to this point here, right? And you buy your setup, whatever your setup happens to be. As soon as this happens, you get out. You hit the button. You physically, manually click the button. Manually do it. You can just set orders. We'll get to that in a second. But manually click the button. And you need to check your P&L after that and see, did you lose the exact amount you were supposed to? If you did, that was a success. Now, what if you did this 5 times today? Every time was a loser, but every exit was at the exact right point. You only lost the same amount of money on each losing trade. Now think about that. You go to your wife on that and say, hey, babe, look, I lost on these 6 trades, and each one of them, I was only able to lose the exact amount I said. I only lost $10 a trade. That's a whole different situation than the guy previous to you. Now, over time, when you do this over and over and over and over, and I suggest you do this live, not on a simulated account, because when the money's not real, the emotions aren't real. I know that you may think that you're treating it like a real account, and I know maybe you are. Maybe you're treating it you're doing it correct. You're treating it right. The fact is the money's not real, so the emotions are not going to trigger the same. What you need to do is condition your brain to feel this emotion of the loss, but understand that this was the expected outcome. So you enter the trade, you expect it's gonna come against you, and when it does, you only lose the amount you were supposed to lose. That is a successful day. That's better than 90% of new traders. Some of those traders aren't going to make it out of this phase, and they're never going to figure this out. They will never be able to do this because of whatever. Sometimes ego gets in the way. You know, I'm not wrong. What do you mean? You're right. Sometimes your emotions of the loss amount gets in the way. Sometimes, you know, you didn't take the extra second and do the math on how many shares you're allowed to take. Okay, and now I'm going to show you how to take the right amount of shares. We're going to go back to this setup here. And what we're going to do is we're going to do the math this time. Put in the work, okay? Put in the work. We see this and we say, you know what? I think this is going to continue. We're up a lot. It looks good, right? It's got strength. We got our consolidation triangle, which is something I look for every time. One of the red signals I have here, which is a couple, I'm not going to point them all out because that's not what we're talking about, but there is these 3 highs all in a row. Okay, so it's a triple top, essentially. We're going to buy as soon as this candle breaks. Okay, now we're not just going to do that. First, we're going to do our homework. Right? Our stop is going to go underneath this low, which is the last swing low that occurred. We're going to measure this out. Right? We're going to go a little bit under that. We're going to go to 21.90 as our stop. Our entry is 23. How far is this? This is $1 and about 10 cents, just for easy math purposes, okay? Now, we are going to take our calculator. I got this little Amazon calculator. And I type this in. Now, I also got a little gem here for you. I'll show you after this, but what we're going to do is say that we are willing to lose $20. Our goal is to lose $20 on each trade that we are wrong today. And we're going to do this every single day until we stop losing the money. But we're going to still exercise these muscle memory habits that we are trying to instill in our trading to be better traders. Right? Trading isn't about how much money you make on the trade. Trading is about how much you lose when you're wrong. I'm going to have another video coming up here, but you ever been asked, you know, like, what's your accuracy? Well, accuracy doesn't mean a damn thing. All right? That's the clear signal that the guy is either brand new, not profitable, or has no idea what he's talking about. You could be right on 9 out of 10 trades, but if all 9 of those trades, you only made $100 each, that's $900. And then on that one trade you were wrong, if you lose $1,000 on it, you're red. You are a net negative trader with a 90% accuracy. That is terrible. That's bad. It means you got no discipline. You got no trade plan. You've got no, fortitude to push through what your brain is telling you and do what is right, and as in exit the trade. That's not good. It's not good. So we're going to work on this, right? So here we go. Our stop, $1.10 for math purposes. We're willing to lose $20. So we're going to divide here. $20, the amount you're willing to lose, divided by the stop amount. So how I say this out loud is how many times can I lose $1.10 to only lose $20, right? So divide by 110 is 18. So we are going to buy 18 shares when it breaks through this high. As it pushes through there, we're going to be long 18 shares. Our stop is going to be here. And the next tip I have is when you know that your stop is $1.10, you need to get that order ready. right? Whether you have another level 2 window, whether you have, I have hotkeys. For me, I would hold Control Shift backslash, and as soon as I get into this trade, I hit that hotkey immediately, right? It's like a part of the purchasing process. When I go and buy the 18 shares, I don't even look up, right? That's actually something I had to learn for myself, is I can't look up after I buy the shares. If I do, I might adjust something and it's going to affect the outcome of my trade. So as soon as I buy the shares, I slam that stop order in, hands are off the keyboard. I wait for my risk reward multiples or my profit targets to start taking profit off. And if it doesn't go up and it comes against me, then my stop takes me out. Easy. I don't have to even do it. So that's how you do the math to figure out how many shares to take. Now you got to be really honest with yourself on how much money you're willing to lose, because you're going to realize that your first attempt at this is too much money. You don't think it is. It seems like a low amount, but you're going to realize little errors are occurring in your execution, and those errors and screw ups are actually from the size being too much. You're risking too much money. Maybe even you don't exactly know how much. Maybe you didn't do this whole step I showed you, and that's going to cause a whole nother set of issues. And when this happens and it comes slamming down, you got stopped out. You stopped. It's over. The pain is done. You stopped the pain. And then you know what you get to do? You get to sit back and watch this happen and think of all the people that had the problem you just had last week and can't get out. They're stuck. They're like, oh my God, what do I do? What do I do? Maybe asking a friend, right? Maybe they're trying to trade with a friend somewhere else and they're texting them. What happened? Are you still long? Blah, blah, blah. And next thing you know, they're down crazy. Even at this point right here, you're down 16%. That's it. Boom. Boom, right? If you took too much size, if you went all in on margin, it's over. Bam. You're done. Your account locks. Your account literally locks on you. You're no longer allowed to take any more trades. You have to either add more money and email them and ask to unlock the account, which is kind of embarrassing. What I want you to get from this is one, you need to do the math on your entry. You need to figure out how many shares exactly you can take to lose the exact amount. Okay, that's one. Number two, you need to look at when this is a losing trade, which it very well is most likely going to be if you're a new trader. When you lose on this trade, it needs to be the exact amount you previously planned on. If it's not, you need to look at what happened, what went wrong, where did you miss something, and you need to repeat it again, only this time it needs to be the right amount. And you're going to repeat that over and over and over and over again, right? You're not going to do too many in one day, because then you're going to start really draining your mental capital, and that's not good. You're just going to do this. You're going to come into the office every day. You're going to say, you know what? Today I'm going to take 3 trades, $20 each. I'm risking $60 today. And you're going to lose 3 times. Each time it's going to be that amount. And if you can do that, then your day is successful. Whether or not you made money, that is a success. All right. And the last thing I got here is, for me personally, when I went through this, because I did go through this happened to me too, and I had a hard time getting out of my losing trades. The thing that helped me the most was to set hotkeys and hit those hotkeys for my stop, right? This is going to be a marketable limit order, where it is a market sell order for longs with a limit price. There's going to be an order that's like sitting out here in the world, and it's going to say sell at a certain price. And when that triggers, it's going to just dump the shares. Now, sometimes there's going to be something called slippage. So, just be aware of that. If you're planning to lose $20 and this time, you happen to lose 21, that's called slippage. It's normal. It's part of the game. We'll get way more into this in the future when we start talking about, technical stuff and really volume driven moves, right? We're not at that point yet. Right now, I'm just trying to get you guys to understand how to get yourself out of the trade. I don't want to be the guy that gives a call or says something and you feel like you want to follow me, but you don't know how to get out, you don't know where I would get out, and you don't know where to take your profit. All right, that can't be the case. So get those hotkeys up if your broker supports them. And as soon as you enter the trade, you want to hit that hotkey, right? You want to enter, see that you're in, hit the button, right? Hit the hotkey and see that you have a live order sitting there waiting to be filled for your stop. That stop is going to actually remain, and we're going to adjust it over and over and over as the trade moves in our favor. If it doesn't move in our favor, it gets shot just like we originally put it. But if the trade did go up, it did a pullback and then continue, right? We would then go to that order and edit it and make our stop now under this low that happened up here after the breakout. And then the next one, and then the next one, and then the next one. And we're just going to follow it up, follow it up, follow it up, right? I've got techniques for this. I use something called speed lines and swing lows combined. And that's kind of my stay in the trade process. But that's for another video. I hope you guys found value in this. I really hope that you take my words to heart. I hope that you could be honest with yourself. And if this does happen to you, really practice these exercises. This is going to make you a better trader. I guarantee it. Guarantee it. If you send me, if you have this problem now and you send me your last 10 trades and each trade you lost the correct amount on it, right? And you say that you're not a better trader, I don't know. I'll do something. I'll give you something. I'll give you a one-on-one, mentor class if that's the case, because something's going on there. And like I said, right, risk management is the number one thing traders fail at, but it is the number one thing you have to master to be able to make it in this business, right? It's not about making money. It's about limiting your losses. Everyone has losses. Everyone has winners. Some people can't get out of their losses or manage their losses. And like I said with the 90% guy, you could be right 9 out of 10 times, but that one time you're wrong, it could wipe out everything you made in the last 2 weeks, 3, 4 months, right? You could blow your account. You could do that dumb averaging down shit, which you should never do, ever, ever, ever. If you were wrong off your original read, you're not right on your second entry averaging down. I'll tell you that much. Okay? Not only are your emotions triggered, not only are you not wanting to accept the loss, not only are you just wrong, right? But now you're going to increase your risk? What? Don't average down. Okay? That was something that it was very easy for me to just slam out of my thinking, because I see, like I just showed you, that isn't going to work. You got to be at least in this business for 2 years minimum before I think that you could make a good enough call to average down. And it's very rare, and there's no real reason to do it. You could just exit and get back in. There's no reason. As soon as you exit and the risk is off, boom, your thinking just goes clear all of a sudden. The risk is gone. You no longer have this fear of pain of losing money. So your vision is going to be clear. That is a much better option than averaging down. So I hope you guys got something from this. If you found value in this, if you like the exercise I gave you, please thumbs up, subscribe, hang around. I got more videos coming. This channel is just beginning. I'm going to have much more. I really, really want to share my knowledge on this. And my end goal is to have some of you guys tell me that I changed your life. I want someone to say, you have affected my life positively in the financial world. I live more comfortably now because of you. I was able to quit my 9-to-5 because of you. That's what I want, right? I don't care about trying to sell you courses. I don't care about whatever. I make enough money. Maybe I'll do a chat room one day for like $10 a month. I don't know. I have no clue. Of course, revenue streams and money is what this is all about, but not right now. Right now, I just want you guys to know that you can do this. I could do this. If I could do this, you could do this. When I came to this business, I didn't know a damn thing, right? And look where I'm at now. Look where I'm at now. It's amazing, and you could do it too. So please stick around. Last long enough to actually make it here. All right. Don't just give your money to the market and say, hey, slap me in the face and I'll walk away because I'm out of money. Don't do that. Right? Actually learn. These little tiny steps of learning are what's going to get you to become a profitable trader. All right. I know we got kind of serious here. You got a little deep, but this is a big deal. This is a big deal. This is losing money. Losing money is no joke. This is, your financial well-being here that we're talking about. And for all you new guys, man, stick with it. And if you could master this, if you can master what we're talking about today, you can add, tweak, and change your strategy and master that too. If you can't master this, I'm sorry, but this isn't for you. Sorry to be harsh, but this is something you have to do. You have to do this. Whether you're a day trader, swing trader, investor, doesn't matter, right? All of those people that make money for a living doing this, they have hard stops. They have a point that they're getting out for a loss, and they respect it. They don't just let it go past it and hope it comes back. That is not how this goes. That's how, your Uncle freaking Tommy that talks about the market that took all of his money and it's rigged. That's what he did, right? You don't want to do that. So please, again, practice your stops. Don't do it in a simulator. Risk very low amounts of money because it still triggers the financial freak out in your brain. And just do this as a repetitious skill that is then going to be transformed into a habit. This needs to become habit. It needs to become habit. All right. Hope you guys liked it. I hope you stick around. Check out the next video. I'm sure it's coming out in the next 2 days or so, maybe even tomorrow. And have a great day, guys. Stay disciplined. Stay green if possible. And if you can't stay green, just, if your losses are correct every time, that's a successful day. That is how you do it. All right. Have a good one, everybody. Peace.